This video is going to feature bullish and bearish engulfing candles. So this is a two candlestick pattern. Essentially what you have is you have a candlestick that gets followed by a much bigger candlestick. Whether it's bullish or bearish depends on what the trend had been previously. So, for example, what you're looking at here is one of two things, depending on the colors of the candlesticks. You're really looking at a downtrend, which the next day may have gapped lower and then shot much higher. And think about what that does. That wipes out the sellers from the day before, and most of the time a couple days before. If it's a truly large engulfing candlestick, it'll do a lot of damage in a very short amount of time. You know, you gap lower and the market just turns right back around. That scares a lot of people who are short. If we're going long and it ends up being a bearish candlestick, this would be red then. It's a rally. You get a quiet day. You get a gap higher, so everybody's happy because they think it's going to continue. And then all of a sudden something horrible happens to price action and you wipe out several days. There does need to be a gap, though, because the second candle needs to engulf the other one, so it has to be higher and lower than the previous candlestick. On this chart here of Yelp, I've got a couple bullish engulfing candlesticks. You can see that clearly swallows the candlestick before, and so does that. So how do we trade it? Well, the stop loss goes on the other side of the candlestick, because if we were to turn around and wipe out this candlestick, that would be a very negative sign. As far as the entry is concerned, it's just simply a break of the candlestick. And you can see both times it's worked out for nice, profitable trading afterwards. With the bearish candlestick, and this isn't as extreme of an example, but it certainly is a valid one. You can see that we had a couple of candlesticks here that got swallowed by this one. And what I also like about this is that there is a shooting star right here, and then this. So on a break below the bottom of this candlestick, your stop loss is above this candle and you continue to go lower. And these happen enough that you see them quite often on charts. Now, I don't want to say they're common, reasonably common. They're not, I wouldn't call them rare, because they do happen. But when you look through daily charts, a lot of times you'll see them pop up, and then you look back at the chart and you go, oh yeah, there was a reversal area there. And, you know, in hindsight, it's always 20/20. That's the thing about these things. You have to trust the patterns. You have to know that over time they work out. There's a slight one there. This chart here shows quite a few close. Like, for example, this is close, but no cigar. This would be a bullish engulfing candlestick. Not my favorite kind, though, because I really like to see, you know, the more pronounced it is, obviously, the more interesting it is. Because you wanted to catch enough people's attention that the market moves right along with you. You know, there are enough people out there going, hey, this is a sell signal. Like this city one was pretty negative. Your stop loss was up here. You got all the way down to the previous resistance level before it turned back around. You know, you also want to, when you trade these, so this is a perfect example of one that, although it is a nasty bearish engulfing candlestick, you would know that somewhere right here around 70, you're probably going to see some buyers due to the previous resistance. Well, at this point, this is a candlestick that makes you risk $3.90 to pick up two. So that's not a trade. I mean, it's doable, but the risk to reward just isn't there. Clearly, though, with that volume, that probably attracted a lot of people. I suspect that they probably shorted it, took some profits based upon some news or something. But that is an example of looking at just the candlestick and how much trouble it can get you in. This is technically a bearish engulfing candlestick, but look at all of this support just below. So do you really want it to risk a couple bucks to pick up, say, 50 cents? And no, you have to use some common sense. But they are excellent signals when they do happen, especially when you have some room to run. I like them when they show up and at various extremes. So with that being the case, take a look on typically the daily charts. You will get them perhaps on an hourly chart at the open, but this is generally a daily or even weekly signal that people will use to determine the trend. And then if they are shorter term traders, use it as a guideline as to how to enter the markets.